Well, good morning. I am Jagender Rana. The topic of the day for discussion is insurance regulatory reforms in 2024. Insurance regulatory reforms in 2024. The Insurance Regulatory and Development Authority of India, that is the insurance sector regulator, took 856 regulatory actions, including penalties against insurers, in financial year 24. So the government informed the Rajya Sabha on this topic. IRDAI regularly monitors insurers through supervisory oversight, such as off-site and on-site inspections, to check solvency ratios, governance practices, and financial health. The regulator risk assessments and compliance audits are also conducted. Regulatory risk assessment and compliance audits are also conducted by insurance companies as per IRDAI regulations. So the regulator seeks the submission of various quarterly and annual returns by insurers periodically. Transparency is ensured through public disclosure, provisions mandated by IRDAI. IRDAI has conducted a total of 154 such on-site inspections and have reason to believe that an insurer carrying on life insurance business is acting in a manner likely to be prejudicial to the interest of policyholders. It may, after giving the insurers an opportunity to be heard, appoint an administrator to manage the affairs of the insurer under the directions and control of the authority. The IRDAI may further transfer the company's insurance portfolio to another insurer so as to ensure that policyholders continue to receive services. The regulator also has the power to direct capital infusion, restrict asset disposal, and take other appropriate measures to safeguard policyholders. As a member of the Financial Stability Board, India as a member of the Financial Stability Board and the G20 is committed to adopting international best practices in a phased manner while taking into consideration local conditions. IRDAI actively engaged with international regulatory bodies such as the International Association of Insurance Supervisors and participates in standard setting discussions and peer reviews. So on 10th January 2025, the Insurance Regulatory and Development Authority published a press release stating that in the interest of maintaining an agile, progressive, and forward-looking regulatory framework, it has notified 2 new regulations along with 3 amendments to existing regulations, and these are IRDAI Regulatory Sandbox Regulations 2025, IRDAI Maintenance of Information by the Regulated Entities and Sharing of Information by the Authority Regulations 2025, IRDAI Reinsurance Advisory Committee Amendments Regulations 2025, IRDAI Insurance Advisory Committee Amendment Regulations 2025, and IRDI meeting Amendment Regulations 2025. So, aiming to align with the principle-driven regulatory architecture, the IRDI has introduced measures to support innovation, improve government policies, and most notably referencing data security as a key facet in the increasing digitalized insurance sector. So the new IRDI regulations introduce several major changes, and as it brings forth a forward-looking shift for the landscapes. Here is a comprehensive look into what the new reforms entails for the industry. The insurance regulatory sandbox regulations says that the newly introduced regulatory sandbox regulations are replacing the 2019 regulations governing experimental. A regulatory sandbox has perhaps received the most benefit of all the notified regulations. It expands on the scope of regulatory sandbox with the purpose of promoting innovation, adaptability, and operational efficiency in the industry. So the sandbox regulation now permits inter-regulatory sandbox proposals, which cuts across more than one financial sector within the regulatory sandbox frameworks. The process and procedures in dealing with such inter-regulatory sandbox applications, along with other aspects of the sandbox regulations such as timelines, which has been entirely omitted from the repealed regulations, have not yet been notified and shall be made operational later through an upcoming master circular. So the sandbox regulations makes explicit mention of the Digital Personal Data Protection Act 2023, that is called DPDP Act, specifying compliance with the not yet implemented Data Privacy Act as a mandatory prerequisite to be granted permissions to establish a regulatory sandbox. By natural implication, this also subjects the sector to the authority of the Data Protection Board under the Act, ensuring an added layer of digital personal data protection. Another change in the sandbox regulations is the formal shifting of powers and the creation of a distinction between authority and competent authority. For the IRDI, authority is now considered a separate entity than the chairman of the IRDI, competent authority. For the whole-time member of the IRDI or officers of the IRDI, as may be decided by the same chairman, could also be considered as competent authority under the new regulations. All matters pertaining to regulatory sandbox applications and operations are therefore now to be handled directly by such competent authority, and decisions taken by the competent authority is considered final on all accounts. The second one is maintenance of information by the regulated entities and sharing of information by the authority regulations. Although new by title, this information and records regulations is essentially a consolidation and simplification of three existing regulations, which have respectively been split into three chapters of the new regulations. Namely, first, IRDA sharing of confidential information concerning domestic or foreign entity regulations 2012. Second, IRDI maintenance of insurance records regulations 2015. And third, IRDI minimum information required for investigation and inspection regulations 2010. So the new information and records regulations greatly streamlines the structural arrangements of provisions under the old regulations substantially, improving readability and ease of reference, reducing clutter and overlap. So with regard to the sharing of confidential information by the IRDI concerning domestic or foreign entities, the new information and record regulations features a new minor tweaks and additions which slightly expand on the powers of IRDI. And the third is Reinsurance Advisory Committee Amendment. So the Reinsurance Advisory Committee Amendment regulations now permits the IRDAI to remove any member of the Reinsurance Advisory Committee owing to insolvency, physical or mental incapability, conviction of any offence involving moral turpitude, acquisition of financial or other interest prejudicial to their being in the committee, abuse of power, failure to attend 3 consecutive meetings of the committee without cause, or if in the IRDAI's opinion is no longer fit to be on the committee. So this essentially gives unfettered power to the IRDAI to remove a member from the committee if it feels such member should no longer be on the committee. Additionally, the amendment permits online mode of meeting for the committee. The Insurance Advisory Committee. The Insurance Advisory Committee amendment designates the Secrecy of the Insurance Act, Secrecy of the Insurance Advisory Committee as the designated officer who is responsible for circulation of notices and agenda of meetings. And the last one is the meeting amendment. The meeting amendment governing meetings of the IRDAI also sees certain procedural changes. It similarly designates the Secretary of the IRDAI board as the designated officer entrusted with the responsibility of issuance notices, circulating agendas, and handling of meeting minutes. So key takeaways and concluding remarks: the IRDAI's latest regulatory reforms marks a notable shift towards a more agile and digitally oriented insurance sector in India. Key changes under the new regulations and the strategic amendments include the expansion of regulatory sandbox capabilities, enhanced data protection measures aligned with the DPDP Act, a streamlined information management system, and more flexible operational procedures for the various committees. These reforms collectively reflect the regulator's forward-looking approach in balancing technological advancements with robust oversight, setting a progressive foundation for the insurance industry's future growth while ensuring adequate consumer protection through improved data security and governance measures. So this is something what the IRDAI has done in the previous year, because the IRDAI took 856 regulatory actions in FY24, including penalties against insurers. So the reforms aim to make the insurance sector more digital and agile. Reforms to life insurance are also there, like policyholders can get policy-related information in a simple format with the customer information sheet. Policy loans are mandatory for all life insurance saving products. Health riders are available to cover health-related emergencies. Partial withdrawals are allowed under pension products. Insurers can offer a range of premiums to facilitate financial planning. Free look period is increased from 15 days to 30 days. A robust grievance redressal system are in place. In the other reforms, expanded regulatory sandbox capabilities, enhanced data protection measures, a streamlined information management system, more flexible operational procedures for committees, Bima Sugam, a one-stop solution for insurance stakeholders. These are a few latest developments which have taken place in the insurance sector, and the IRDAI has done in financial year 2024. With the expense management oversight IRDAI started quarterly monitoring of insurers exceeding their 30% expenses of management limit, requiring them to submit regular reports to enforce financial discipline. The regulator reported taking 56 regulatory actions against insurers in FY24, including penalties. High commissions and bank assurance practices were reviewed due to a significant rise in expenses since April 2023. New guidelines were introduced to simplify insurance products, provide clearer customer information sheets, and enhance policyholders' benefits. And IRDAI issued a master circular on corporate governance for insurers, emphasizing robust internal controls and accountability. At the same time, the IRDAI also issued the master circulars on general insurance as well as life insurance. Thank you. Thank you very much.